A major conflict has shut down 20% of the world's oil supply, and it could send Bitcoin crashing hard. Crypto Jebb is sounding the alarm, warning that chaos in the stock market could drag Bitcoin down to the $40,000 range. He's holding cash, waiting for a deep correction. But CryptoRover sees a different picture unfolding. He points to massive institutional buys, like BlackRock's recent $264 million purchase, as a sign of strength. He's targeting the $55,000 level to accumulate more. So is a macro-driven crash inevitable, or will institutional demand create a floor? In the latest video from the Crypto Jebb channel, there's a serious warning about a stock market crash that's already started. It's all tied to a massive conflict in the Persian Gulf involving the US, Israel, and Iran, which has shut down the Strait of Hormuz. This is a huge deal because about 20% of the world's crude oil, and up to a quarter of its natural gas, moves through there. With that supply cut off, oil prices have shot up 41% to $82 a barrel and could even hit $100. This uncertainty is causing chaos in the U.S. stock market, creating big drops in the Dow Jones and S&P 500. The situation is being compared to the start of the Ukraine war, which led to a 27% drop in stocks and a 78% crash for Bitcoin. Because Bitcoin's price often moves with the stock market, another major downturn in equities could drag Bitcoin down to the $40,000 to $50,000 range. The speaker's strategy is to hold a lot of cash right now. He sees stocks as great assets but at bad prices, suggesting it's better to wait for a deep correction, maybe to the 200-week moving average, before buying. While he thinks Bitcoin is at a good price, he's waiting for an even bigger dip before investing more heavily. The video's premise of a full-scale conflict shutting down the Strait of Hormuz is a scenario that markets are indeed pricing in as a major risk. Recent reports from early March 2026 confirm that escalating tensions have led to an effective closure of the strait, with major shipping companies halting transit and insurance providers withdrawing coverage. This has caused a significant spike in oil prices, with Brent crude pushing toward the $85–$100 per barrel range, as analysts from Goldman Sachs and others have warned. The speaker's analysis of market contagion is spot on. Geopolitical shocks in the Middle East serve as a direct transmission channel to global markets, primarily through energy prices. The connection drawn to Bitcoin is also currently valid. The 30-day rolling correlation between Bitcoin and the S&P 500 remains elevated at around 0.55, meaning they continue to move in tandem during periods of market stress. This undermines the digital gold narrative for now, as Bitcoin is behaving more like a risk-on asset that suffers alongside equities rather than acting as a safe haven. While some on-chain data may show signs of seller exhaustion for Bitcoin, the macroeconomic pressure from a potential energy crisis and its impact on stocks is likely to keep the price suppressed in the short term. In the latest video from CryptoRover channel, the discussion centers on Bitcoin's current consolidation phase, a pattern that has historically led to significant price movements. He points out that while Bitcoin has seen a slight rejection from the range high, big players are still buying in. For instance, BlackRock's spot Bitcoin ETF recently snapped up another $264 million worth of Bitcoin. On the political front, there's a push from President Trump for Congress to get a crypto market structure bill passed, with a 70% chance of it happening in 2026. A notable event mentioned is a service disruption at the Federal Reserve, which stands in contrast to Bitcoin's constant uptime. The speaker shares his personal strategy, which involves a plan to start accumulating more Bitcoin if the price drops to a range between $61,000 and $56,000, with a key interest in the $54,000 to $57,000 zone. He's also keeping an eye on the S&P 500, which is showing some weakness, partly due to rising oil prices from tensions in the Middle East. If Bitcoin does break down, he sees a potential floor around $55,000. Regardless of the short-term direction, he remains bullish for the long haul, continuing his daily dollar-cost averaging strategy and holding spot positions, ready to benefit from a potential rally towards $130,000. The analysis of Bitcoin's consolidation is particularly timely, as the market is currently caught between conflicting macroeconomic signals. The speaker's observation of continued institutional buying is strongly supported by recent data, which shows spot Bitcoin ETFs have seen renewed net inflows, with BlackRock's IBIT leading the charge. This confirms that large entities are indeed using these price ranges to accumulate. The political angle mentioned is also heating up. President Trump has intensified his push for crypto legislation, meeting with Coinbase's CEO to pressure banks that are reportedly stalling the Clarity Act over a dispute on stablecoin yields. Furthermore, the concern over Middle East tensions is valid, as it has introduced broad market volatility. However, an interesting counter-narrative is emerging, where Bitcoin has shown resilience, with some analysts suggesting it's being treated as a temporary, safe haven asset amid the conflict. While the technical levels outlined provide a clear trading plan, these powerful external catalysts, persistent institutional demand, and a significant push for regulatory clarity are setting the stage for a potentially explosive breakout from the current range.